Markets, the NSE gained upside momentum today with the composite index gaining 0.96% to close at 37,259 points. Traded volumes, however, fell 19% to 2.4 billion naira. Forty oil, the top performer for this quarter, extended recent gains, adding 2 naira 23 kobo to close at 45 naira 57 kobo. Other gainers included Dangote Cement, Cadbury Nigeria, and Zenith Bank. Joining me from the NSE trading floor to round up the trading day is Babajide Sholanke, a research analyst at FSDH Merchant Bank. Jide, thank you very much for joining us. So the market picking some upside momentum, but on the flip side, we did see volumes fall back quite a bit, almost 20% today. Yesterday, they also fell back. So your thoughts, first, maybe starting with the issues around the volumes. We're seeing volumes fall back a little bit. Why do you think that's the case?
Thank you, Wally, for having me. As you rightly said, the market did an uptick today. And the volume, as you rightly explained, is that a scenario. But again, what I think about the volume is that there's a cautious approach to the buy, to the buy demand, to the buy orders by investors through the brokers, as people are cautiously repositioning and rebalancing their books to take advantage of the quarterly earnings season that is about to begin to be unleashed, with more results to be expected in the market in the short while.
Right, so those results coming up, what are your broad expectations for that? A lot of people are kind of bearish about the banks these days. Are you that bearish as well?
Before I go into the bearishness about the bank's sentiment, the market, if you look at the 10-year historical trend, the market kind of relatively do well on the average in October, as opposed to August and September that we're coming off from. And that's the reason that was informed me to say that there's a cautious approach to buy, to take positions in stocks that have good fundamentals. For the bank's earnings, as Riley said, is expected to be relatively flat in Q3 2013, not far-fetched because of the current monetary policy stance that keeps a very, very eagle eye on the bank's activities, and because of a change in the banking model that the central bank is advocating, moving away from dependence on government funding, on government fiscal activities, and opening up their books to increase their risk assets by diversifying by expanding their books into the real sector of the economy. So the banks, is expected to have some flat earnings, as we saw in Q2 2013.
So if those earnings are as flat as you're suggesting, what's the likely impact for the market? Do you think this is something that is going to keep the market where it is, or do you think this is something that would eventually see it falling back a little bit in the fourth quarter?
Yeah, in the fourth quarter, I expect the market to close relatively flat, but marginally, not as flat as in September, but marginally better than what it did in September. As I said, I expect the market to repeat what it did, to repeat what it did in that 10 years historical trend. And moreover, the quarterly earnings, the drivers of that Q4 activity that will make the market close marginally higher than it did in September, apart from is the quarterly earnings expected and the activities of investors in trying to position themselves for the earnings from companies, historical bias towards movements of the index and the index in the final quarter of each year. Historically, the market always do well in Q4 towards Q4 2020, in Q4 of any year. And of course, the current monetary policy stance of the central bank, the expected continuation of the quantitative easing program of the Federal Open Market Committee of the Federal Reserve of the United States as well.
Right. We'll talk a bit about that, the impact of the FOMC moves going forward. But your take on the sectors that are likely to surprise to the upside, if any at all? Or do you think this is just one earnings season that is just going to come and go, no major surprises to the upside in your view?
Yeah, I think the surprises in my view will be some consumer durables, maybe like Cadbury, flour mills, and some stocks in that category.
But those gains, wouldn't you say those gains have already been priced into a stock like Cadbury, for instance? We've seen that stock rally quite a bit over the last year.
Yeah, it's priced in, but beyond beyond pricing, the psychological part of the market, which is not beyond quantitative analysis, companies like Cadbury, consumer durables, are companies that will ordinarily do well, and breweries that won't ordinarily do well as you go into the festive season, which is about what we're getting in. As people get more happy, as people expect the Christmas season and other festivities that are coming in, people will increase demand for these commodities. And beyond the pricing of the fundamentals of those companies, the current pricing, I agree with you. But beyond that psychological effect, Q4 activity, Q4 expectation, good Q4 performance expectations, and other variables I mentioned earlier on will gravitate the stocks into improved activities.
Jide, what's your outlook for foreign investment inflows into this market going forward? We have quite a bit to get through over the next 3 months. Of course, another FOMC meeting. We have the U.S. partial government shutdown currently on, and then, of course, we do have that October 17 key date with respect to the debt ceiling and if that will be shifted or not. So in this context, what's your outlook for foreign investor inflows? Because clearly what they do is very important to this market.
Yeah, no, even beyond the market, Wale, even beyond for the equities market, and of course the fixed income market.
Yeah.
For the broad macroeconomic, the continuation of the QE is expected to gravitate more inflows into the Nigerian economy. Moreover, the shutdown of the U.S. government, which in itself is not a good thing. I do not like what's going on in there because of the weight of the American economy, the global economy. But you know, it is good for us because what it implies is that the FOMC, which is the Open Market Committee, the United States that sets the benchmark rate, will not begin to taper because it becomes increasingly difficult with this shutdown, and if approaching debacle about the October 17th debt ceiling, it becomes more difficult to achieve the unemployment target of 6.5% set by the FOMC and the 2.5% set inflation rate set by the FOMC. Moreover, even the president succeeding Bernanke, which is going to be introduced to the public today, Janet Yellen, is known to be a dove who prefers low unemployment. And when you look at all those scenarios, what it implies is that we'll continue to see accretion, some level of high probability of further accretion to our scenario reserve to help us to meet the shortfall from oil production that has not been making the scenario reserve to grow as much as it should, of course. And of course, some will trickle down to specific market like equities market and foreign exchange market as well. So I expect this, the continuation of this shutdown, the imbroglio going on about the debt ceiling is a positive for Nigeria, because what it means is that it will be, as I said, difficult for the FOMC to achieve its target, and of course, they will leave the QE to go on as it is.
Right. So overall, as long as the Naira stays stable, all this is positive for foreign inflows into Nigeria and, of course, positive to the markets, for the markets. Let's leave it there. Thank you so much.